Assalamu alaikum and good evening. Welcome back to the second part of income tax. There are two important things, there are two important basic elementary things which are really important whether you need to pay the income tax or not. Number one is Section 6 of Income Tax Act 1961, that is residential status, and Section 5, scope of total income. Section 5 we will discuss in another part. In this part, let us discuss about the Section 6. Section 6 decides the extent of taxable income, that whether you need to pay the tax on the income or you need not to pay the tax on the income, though you have the income. Section 5 talks about if you are a resident, how much income you need to pay the tax. If you are resident but not ordinary resident, on how much income you need to pay the tax, and non-resident, how much you have to pay the tax. That is related to Section 5 altogether. That we will discuss in the part 3. Now, today we will discuss the part 6 first. And the residential status is applicable to the individual, HUF, Hindu Undivided Family, then firm, that is a partnership firm, association of person, body of individual, and company. So we will discuss today all of this, when and how, whether they are resident of India and whether they are not resident of India. And there is a third category as well, a resident but not ordinary resident. And this third category is applicable only for the individual and the HUF. So, what we'll discuss is first residential status of individual. So, residential status is nothing to do with the citizenship or domicile or nationality of the country. Anybody can be a resident of India if he satisfies some conditions. If he or she satisfies some condition, anybody can be the resident of any country. So when we are talking about India, let us talk about India. That any national, any country's national can be resident in India, and his taxability applicable whether he is a resident of India or a non-resident of India. Here, this is the physical stay, resident in the sense, physical stay in India. So, the first myth, let us clarify that it is not related to citizenship or domicile or any nationality. So, residential status is related to something which physically present in India. That is the first thing. And the second thing is that, let us talk about the residential status of the individual. An individual can be a resident and ordinary resident, can be resident but not ordinary resident, and a non-resident. All these three status can be acquired by either satisfying some of the conditions mentioned in Section 6, subsection 1 and Section 6, subsection 6. There are two types of the conditions which are mentioned in the Act with regard to the individual residential status. Section 6 subsection 1 talks about the basic condition, and Section 6 subsection 6 talk about the additional condition. If any individual, that is the first basic condition, let me explain you the first basic condition. If any individual, if any assessee stays in India, it says stays. Okay, there is a difference. That's why I'm stressing stay. There is a difference between stay and the resident. I'll tell you later part. So, if any person stays in India for a period of 182 days in the previous year, he is the resident of India. So, whether he's an ordinary resident or not ordinary resident, we'll decide later. So, any person, there are in section 6 subsection 1 there are two basic conditions. One of the condition he has to satisfy in order to become a resident of India. So the first condition is he has to stay in India for a period of 182 days in India. If he does not satisfy that, or either of this, a person should stay in the previous year for a period of 60 days and 365 days in 4 preceding previous years. That means leaving the previous year, 4 preceding previous year. So that means if our previous year is 24-25, leave this, go back 4 years and check that if a person stays in India for a period of 365 days, not necessary that he has to stay uniformly in all these 4 years. First year he does not stay, okay. Second year he does not stay, okay. Third year he does not stay, okay. In the fourth year if he stays 365 days and 60 days in the previous year. So if our previous year is 2024 and 2025, 60 days in 24-25 and go back 4 years and check whether he stayed in India 365 days all put together in 4 preceding previous year, leaving previous year, whether he stayed or not. If he satisfy one of the basic condition, that is 182 days in the previous year, that is in our example 2024-2025, that is start from 1st April 2024 to 31st March 2025. If he stays in India for a period of 182 days, then he is a resident. If he does not satisfy that, he stays only 180 days, then that first basic condition he did not satisfy. Then we'll go and check the second basic condition. Second basic condition is that in 2024 and 2025, 60 days in that year, that is in the previous year, and we'll go back 4 years, leaving 2024-25 and check whether he stayed in India for a period of 365 days or not. If he satisfy any one of the basic condition mentioned under section 6 subsection in which I have explained you, then he is a resident of India. Now we need to check, since he is a resident of India, whether he is an ordinary resident or not. Then we have 2 more conditions, that is called the additional condition mentioned under section 6 subsection 6 with respect to individual. In the first additional condition, you have to take, leaving the previous year, you need to go back 10 years and check that in 2 out of 10 preceding previous years. Preceding previous year means leaving the previous year, you need to go back 10 years. In that means in our example 2024-25, leave that, go back and take a block of 10 years. In that 10 years, if he is in India for a period of 2 years, he is actually resident. He should satisfy 182 days or 60 days as the case may be in India. That is, he satisfies the first additional condition. Now, second additional condition says that he should stay in India for a period of 730 days in 7 preceding previous years. Leaving previous year, take 7 years and check all put together 730 days he stayed in India or not. If any individual satisfy one of the basic condition and both the additional condition, then he is called resident and ordinary resident. If any person satisfy one of the basic condition mentioned under section 6 subsection 1 and one or none of additional condition mentioned under section 6 subsection 6, then he is called resident but not ordinary resident. If any person does not satisfy any of the basic condition mentioned under section 6 subsection 1, then he is called non-resident. This is the residential status of the individual. With respect to Hindu undivided family, either there is no third category, either resident or the non-resident. So, we have non-ordinary resident as well. Here, HUF is a resident if 100% control and management is in India, then resident and ordinary resident. Okay. Then if the Karta, that is the male member of the family, satisfy both the additional condition, then that HUF is resident and ordinary resident. If the if the control and the management is wholly outside India, 100% outside India, then that HUF is a non-resident. With respect to firm, association of person, body of individual, that is a partnership firm, association of person in the body of individual, if the control that is mentioned under section 6 subsection 3, if the control and the management is situated wholly 100% in India, then it is resident. If for 100% is wholly outside India, then it is called non-resident. With respect to the company, the control and management of the company should always be in India 100%, then it is resident. If any partially also the control and management is outside India, then it is a non-resident. Indian company or the domestic company is always a resident of India. The company which is incorporated and registered in India, it is always a resident. See, control and the management means the meetings are conducted here, the directions are being given from here, the board meetings are conducted here in India, and all the directions, controls, policies, governance, everything has been made in India. In that case, that is called the control and management. Okay. Now, let's recapitulate it. For the individual, any person can be in India for a period of 182 days. In India, then he is a resident. If it does not satisfy that, 60 days in the previous year and 365 days in 4 preceding previous year. That is the two basic conditions mentioned in section 6 subsection 1. Section 6 subsection 6 talks about he has to be resident in India for 2 out of 10 preceding previous years and 730 days in 7 preceding previous years. With respect to the HUF, the control and the management should 100% be in India, then it is a resident. If it is a control and management 100% outside India, it is a non-resident. And in order to be called resident and non-resident, the Karta has to satisfy both the additional conditions mentioned previously, then it is called resident and ordinary resident. If it does not satisfy, then it is resident but not ordinary resident. With respect to firm, association of person and the body of the individual, the control and management wholly or partially in India, then they are called resident. If 100% control and management is outside India, it is called non-resident. With respect to the company, always the Indian company, the domestic company is a resident of India. The company's control and management, if it is wholly 100% is in India, then it is called resident. If it is 100% outside, 100% or partially outside India, then it is called non-resident. So we learned about the residential status. The residential status and the incidence of tax and the scope of the total income, these two are the basic elementary sections which invoke tax in your life. If you are a resident, you need to pay the tax wherever you earn the income. You earn the income in India or any part of the world, you have to pay the tax in India unless there is a double taxation avoidance agreement under section 90 and 91. If we do not have this double taxation avoidance agreement, then you need to pay the tax. Wherever you earn the income, you need to pay the tax in India. Okay, so we will talk about the incidence of that tax and scope of the total income in part 3. Thank you so much. Keep watching the channel. Thanks.